The waiting game is finally over. XRP has officially shattered the psychological $2 ceiling, trading decisively above the mark for the first time since mid-December. But before you start celebrating the next leg up, you need to understand exactly why this move is different and the one critical price level that is now acting as the line in the sand for the entire market. Welcome back to the channel. Today we're breaking down the massive surge in Ripple's XRP as it zooms past $2. We're looking at the institutional money flooding in, the major regulatory shift in Washington that just triggered this rally, and the specific price targets traders are watching right now. Let's dive in. First, let's talk price action. This wasn't just a random pump. On January 3rd, we saw a massive volume spike over 150 million tokens traded in a single session that forced a clean break through $1.96. Why is $1.96 so important? For weeks, this was the decision point. Every time XRP rallied past it, it failed to hold, but this time, we flipped that ceiling into a floor. Right now, traders are watching a new support pocket forming between $2.01 and $2.03. If the price can consolidate here without snapping back, the breakout is confirmed. But here is the risk. If we lose the $2 handle, $1.96 is your final defense. If that level fails, this rally could be written off as a liquidity grab, sending us straight back into the previous range. But as long as we stay above $1.96, the bulls are in full control. So, what is fueling this move? It's a perfect storm of supply shock and political optimism. First, the institutional demand is tightening the available supply of XRP at a rate we haven't seen before. Spot XRP ETFs have now absorbed over $1.18 billion since launch. That is more than $1 billion worth of tokens effectively locked in custody and taken off the liquid market. When supply shrinks and demand stays constant, price has only one way to go. Second, the regulatory headwinds are turning into tailwinds. The market is reacting positively to the news of SEC Commissioner Caroline Crenshaw's departure. She was a vocal critic of crypto ETFs, and her exit is being priced in as a signal that a friendlier, more pro-crypto SEC is finally taking shape for 2026. Looking ahead, the calendar is heating up. We have a major date to circle, January 15th. That is the potential markup date for the new market structure bill in the US Congress. If that legislation moves forward, it could provide the regulatory clarity that institutions have been waiting for to deploy even more capital. Forecasts are widening, while some conservative estimates see a retest of $2.30 in the short term if support holds. Bolder predictions from major banks like Standard Chartered are still pointing to much higher long-term target sum as high as $8, driven by this exact combination of ETF scarcity and legal clarity. To wrap it up, the bulls have the ball. The breakout above $2 is real, but it requires defense. Watch that 201 to 203 zone closely today. If it holds, the path to $2.30 is open. If we slip, all eyes go to $1.96. What do you think? Is this the start of the run to all-time highs or a fake out before a correction? Let me know your targets in the comments below. Don't forget to like and subscribe for daily updates on this breakout. I'll see you in the next one.